Okay, we're back on. Oh, and I forgot to tell y'all, don't forget the rules. Come whenever you want, leave early if you need to. This is your club. Get up and get a drink anytime. Tushar, you're welcome to take this seat here. And thanks for helping pack the room. This is great. I love it so much. So welcome, welcome. And if you didn't get a chance to sign in on the front end, sign in on the back end. We're casual around here. It's all about trading information. Okay, here we go. The market update for AVID investors is we're seeing indicators that the spring market is coming on strong. While it's been quiet in winter and fall, we are getting lots of indicators, including applications from the lenders, which is usually an early sign that things are going to heat up. Many investors are still sitting on the sidelines. So investor business has been quiet. And should it be? Well, interest rates have been affecting things, but the rates that we have now are not going to go back to the 4% range. So higher rates are here to stay. It's time to factor that into our planning and decide if we're in the game and staying in the game. And for those who are wondering if we will get more in-migration from California again, since the last time there was mega wildfires, the Camp Fire, as well as a pandemic, we had a huge flood. That data took 6 to 8 weeks to affect our market. So we won't really officially know until about 6 to 8 weeks after that. But I've heard folks speculating. So I'm StacyA McBain, AVID Investors. Thanks for being here. We'll go into it a little deeper, but that's the gist of what's going on here in the market. Here it is in pictures. The rates held in January due to inflation. They did not lower the rates, and there's two lines of two different sets of predictions, which they thought might occur. And we'll see what happens in the future. But as we know, they tend to follow the yield curve, and that's what that picture looks like. But in general, Dave Rusk of Idaho Central Credit Union is saying he's having a huge upswing in his applications. On the screen, you can see that what the rates are doing specifically, but we're looking at high 6s, low 7s for some investor deals, and this absolutely affects performance. Everything cash flows with cash. So cash buyers are still out there. There's still some 1031 deals happening, and we'll talk a little bit more about those. ARM loans are back. So if you put enough down, you get a better interest rate. Or if you are an owner-occupier and you do an ARM loan, that is providing a big enough incentive in your interest rate to make it enticing again. What the numbers look like is the median price of home is up. The little arrows this time I did month over month, but the big pictures are year over year. So year over year, we have up in sales price, up in days on market a little bit, up in homes sold, and up on inventory in Ada County. However, month over month, we were down in inventory as well as the number of homes sold. That's also seasonally typical. That's you. In Canyon County, we had fewer homes sold year over year. And I think for some reason on this slide, I did year over year with the big blue arrows, but you'll see that we had fewer homes sold, but everything else was up. The median sales price is still up. Days on market is up and inventory is up. So an up arrow doesn't always mean an increasing price. So days on market shows things slowing, and higher inventory affects the laws of supply and demand. Duplexes and fourplexes, we've seen a similar trend where inventory dropped again and pending deals dropped a little bit, but sales were pretty consistent. They only went down by 1 during the cooler season. And absorption is all over the place. And that's telling us whether it's a buyer's market and it's a seller's market. But overall, the market is really absorbing the duplexes and fourplexes that we have. However, days on market, Tony Dross's data, which he's been collecting for 10 years, shows that days on market has really spiked. But we're going to attribute that to a couple key players out there. You can do two things when the market slows down, and the fourplex market slowed down a little bit in fall. You can either price so that it actually sells in a reasonable amount of time, or you can say, I'm going to ride it out. This is my price, and you can ride up the days on market. And we had a couple fourplexes doing that were at 100 and some days on market. Quite a few. Well, not quite a few, just a couple doing that. Our cap rate has been consistent and our gross rent multiplier has been consistent. So things have really kind of settled in and stabilized at what our current rates of return are. So investors who are hoping for better interest rates to help boost returns aren't yet seeing it. And we're actually thinking that interest rates are going to hang out there for a while. So here's the bar graph of what cap rates look like. And you'll see at the end what our trend is. It just sort of flatlined out. But we are at, what are we at here? Just 5%. Is that? Yeah. Sorry, I had a quick thought to make sure I updated something. But yeah, we're right around 5%. Here's our price per floorplex trends, which are in the, upper 800s. Vastly affected by age. But then here's this days on market chart, which shows that days on market have gone up to 67. So those have just been steadily climbing again due to a couple players. But check this out. The Ada County fourplexes that we have available went down to 4. Last month, we had about 8 of these to show. And what's interesting is one of those players that was hanging out, just boosting up our days on market, was on Lucky Lane, which is a great property, but they were trying to get 930 for it. And that wasn't where most fourplexes were selling last fall at all. But they did. They just closed it. They got their 930,000 in all cash buyer.
Wow.
Yeah, they got it. And we got it. I listed one of those about a year ago. We got something right around there as well, but that was kind of a different market. So it wasn't quite as shocking when we got it. And it also didn't take us 108 days. So. And then in Canyon County, also we have 4 fourplexes available. So our fourplex inventory has been absorbed a little bit. And if any of these slides are too far away or you can't see them, you need to hit us up for them afterwards. You're always welcome to hit me up for a copy of the presentation. I'm happy to share it. So we won't delve too much on the market data like this, because this month's focus is really going to go heavily into the commercial and those bigger trends on those bigger multifamily properties, which are 5+. That said, I know we all care what's going on, and we've got property managers who are willing to give us their insider take on what they're seeing with the rental market. One of which is First Rate Property Management. Overall, they're seeing that tenant retention is remaining strong, even with moderate rent adjustments. So unless those rents have fallen way behind, they're not seeing really heavy pushes on the rent increases. And they're going to monitor those as the season progresses. But they're getting more applications, which is showing signs of their own spring warm up. And also, let's see. This is the renewal data, 35 renewals so far this year, a fair bit of renewals as opposed to move outs. So we like to see that because obviously turnover and vacancy, those are our big number killers. And it looks like 19% of their renewals got a rent increase, and 80% of the tenants who gave notice had received a rent increase, but that doesn't mean that rent increase caused the move out, of course. So that's what's going on in a nutshell on this front. So I will introduce Danielle Costa to do the Urban Edge rental market update, because she's got boots on the ground with property management as well. Here you go, Danielle. Thank you.
Yeah, of course. So we've seen a cooler market with winter, as expected. Weather means slower, but we are needing to gear up for the spring season. We are already seeing it get quite busy. So be prepared. It's better to be on top of it than behind it. Big part of this is contacting renewals in advance. Huge way to get ahead of the market. Normally people do 30, 60 days. We're going all the way till May for our renewals. So what we are saying is be prepared. Don't wait till last minute to contact people. Start marketing your vacancies early if you do get notice. because it is gonna get hot real quick, and we are expecting it probably to get warmer than sooner rather than later. So there's our quick market update. Renewals are going really good, as we can expect. We actually only had 4 notices this month. 3 of them were to buy homes, so people are still moving out. The other one was because they wanted a $300 rent decrease, which as owners, we know that's very unlikely that that is going to happen. Like I mentioned before, it's good to contact your renewals as sooner rather than later. We're going all the way out till the end of May. If you can go out further than that and just kind of get an inkling on what your tenants are thinking, highly recommend it. And then we've also noticed that tenants are looking between 30 to 45 days in advance on marketing. We have had a few that, you know, are looking in June, looking in May, but what we are seeing is you need to time it right when you start marketing the property. If you market it too late, it may sit because not everyone is looking to move within 2 weeks. And then also people aren't looking to move in June quite yet. So make sure that you're putting it on market at the right time. For example, I'm getting a lot of obnoxious calls of people not seeing when properties are available, and we're having to tell them, hey, it's not available until May. And they're like, well, I'm looking in March. So that's all about timing your properties on when you're putting them on market. That's about it. If we have any other questions. Anyway,
Yes, Urban Edge Property Management.
Urban Edge Property Management. Well, if we have no more questions, I'm going to welcome Karen. Yes.
How do you guys find out what rent should be charged for a given property?
So we do a market analysis, see what's renting in the area. We have a couple different tools that we have access to that helps us decide, but a lot of it is just like real estate, pulling a market analysis, seeing what properties should rent for.